Accounting for the non-accountant, a beginner's guide to financial statements.
Video description.
Are you feeling intimidated by financial statements? You're not alone. In this video, we'll break down the basics of financial statements and explain them in a way that's easy to understand, even for those without an accounting background. We'll cover the three main financial statements: the balance sheet, income statement, and cash flow statement, and demystify key terms and concepts. Keywords: financial statements, accounting, non-accountant, beginner's guide, balance sheet, income statement, cash flow statement. Introduction. Visual of confused person looking at a financial statement. Narrator. Financial statements can be confusing, but they don't have to be. Welcome to Accounting for the Non-Accountant, a beginner's guide to financial statements. Whether you're a small business owner, an investor, or just curious about finance, this video is for you. Visual of three financial statements: balance sheet, income statement, cash flow statement. Narrator. We'll cover the three main financial statements: the balance sheet, income statement, and cash flow statement, and explain what they tell us about a company's financial health. Even if you don't have a background in accounting, you'll be able to follow along and gain a basic understanding of financial statements. Balance sheet. Visual of sample balance sheet. Narrator. Let's start with the balance sheet. This financial statement shows a company's assets, liabilities, and equity at a specific point in time. Think of it as a snapshot of a company's financial position. Visual of equation: assets equals liabilities plus equity. Narrator. The balance sheet follows the accounting equation, which states that assets equal liabilities plus equity. Assets are things that a company owns or controls, such as cash, inventory, or property. Liabilities are debts or obligations, such as loans or accounts payable. Equity represents the residual interest of the owners in the assets of the company after deducting liabilities. Visual of specific items on balance sheet, such as cash, accounts receivable, inventory, accounts payable, long-term debt, common stock, retained earnings. Narrator. The balance sheet includes specific items that give us a more detailed picture of a company's financial position. For example, cash is a current asset that represents the amount of money a company has on hand. Accounts receivable are amounts owed to the company by its customers, and inventory is the value of goods the company has on hand and available for sale. On the liability side, accounts payable represents amounts a company owes to its suppliers, while long-term debt is debt that will not be paid off within the next year. Finally, common stock and retained earnings represent the owner's equity in the company. Income statement. Visual of sample income statement. Narrator. Now let's move on to the income statement, which shows a company's revenues and expenses over a specific period of time. It tells us how much money a company made or lost during that period. Visual of equation: revenue, expenses equals net income. Narrator. The income statement follows a basic equation: revenue minus expenses equals net income. Revenue is the money a company earns from its primary business activities, such as sales of goods or services. Expenses are the costs associated with running the business, such as salaries, rent, and materials. The difference between revenue and expenses is the company's net income, or net loss, if expenses exceed revenue. Visual of specific items on income statement, such as sales revenue, cost of goods sold, gross profit, operating expenses, net income. Narrator. The income statement also includes specific items that help us understand how a company is making money, or not. Sales revenue represents the total amount of money earned from sales, while cost of goods sold is the cost of producing those goods or services. Gross profit is the difference between sales revenue and cost of goods sold. Operating expenses are the costs associated with running the business, such as salaries, rent, and advertising. Net income is the company's profit after all expenses have been deducted. Cash flow statement. Visual of sample cash flow statement. Narrator. Finally, let's look at the cash flow statement. This financial statement shows how much cash a company generates and uses during a specific period of time. It provides insight into a company's liquidity, its ability to meet its financial obligations as they come due. Visual of equation: cash inflows, cash outflows equals net cash flow. Narrator. The cash flow statement follows a simple equation. Cash inflows minus cash outflows equals net cash flow. Cash inflows include receipts from sales, collections of accounts receivable, and loans received. Cash outflows include payments to suppliers, salaries, and taxes. The difference between cash inflows and cash outflows is the net cash flow. Visual of specific items on cash flow statement, such as operating cash flow, investing cash flow, financing cash flow, net increase in cash. Narrator. The cash flow statement is divided into three sections: operating cash flow, investing cash flow, and financing cash flow. Operating cash flow represents the cash generated from a company's primary business activities, such as sales of goods or services. Investing cash flow represents the cash used for investments, such as buying property or equipment. Financing cash flow represents the cash used for financing activities, such as repaying loans or issuing stock. The net increase in cash shows the overall change in the company's cash balance during the period. Outro. Visual of confident person looking at a financial statement. Narrator. Congratulations.
You've made it through Accounting for the Non-Accountant, a beginner's guide to financial statements.
By now, you should have a basic understanding of the three main financial statements: the balance sheet, income statement, and cash flow statement, and what they tell us about a company's financial health. Don't be afraid to dive deeper and learn more, or to seek the help of an accountant or financial advisor if you need it. Remember, financial statements may be complex, but with a little knowledge and confidence, you can understand them and use them to make better decisions. End screen with call to action to subscribe or visit website. Voiceover. Female voiceover. Welcome to Accounting for the Non-Accountant, a beginner's guide to financial statements. In this video, we'll break down the basics of financial statements and explain them in a way that's easy to understand, even for those without an accounting background. We'll cover the three main financial statements: the balance sheet, income statement, and cash flow statement, and demystify key terms and concepts. So sit back, relax, and let's get started.